The question of hyperinflation or even kind of moderately strong inflation is probably one of the number one things that's confusing people today, because they've heard for years, if the Fed prints this much money, we're going to get inflation, so you better go out and buy gold or buy some other hard assets. And that's pretty conventional thinking. But here's the problem. Printing money by itself does not cause inflation. That's a fallacy that comes from following Milton Friedman. Milton Friedman famously said inflation is always and everywhere a monetary phenomena. So if you print money, you're going to get inflation. Now, the Fed has printed $4 trillion in the last 5 years. That's true. But we don't have very much inflation. It depends how you measure it. There's some controversy about that. But the bottom line is not only do we not have inflation, right now the greater danger is deflation. So people are confused. They're like, wait a second, what happened? You told me that all these gurus and all these analysts said if the Fed prints $4 trillion, we're going to get all this inflation, but we don't actually see it. Well, the fallacy is printing money by itself does not cause inflation. You need two things. You need the money, but you also need the turnover, what's called the velocity. You need people actually to go out and borrow it and spend it. The way I explain it, if you want a ham and cheese sandwich, you need ham and cheese. Printing money is the ham, but where's the cheese? The cheese is this, what we call velocity, which is really behavioral, and it depends on how you feel. If you feel great, if you feel that the economy's in very good shape, that your job is secure and your future is bright, you might go out and spend money and take your friends out to dinner and buy a new car and do all kinds of things. But if you're concerned, if you're troubled, if you think the economy's weak, if you're not sure you're going to have your job, you'll probably stay home, put your money in the bank, pay down some debt, deleverage, etc. So that's the psychological part of it. So the Fed can print all the money they want, but if people don't go out and spend it, you're not going to get the inflation. Now, that doesn't mean inflation can't happen. It certainly can happen, and it certainly is a threat. But the money supply is like dry wood. Okay, we got a whole big pile of dry wood. Where's the match? Where's the thing that's going to cause that psychology to change? That's what we have to watch out for. So again, the fallacy is printing money by itself does not cause inflation. Printing money with a change of behavior does cause inflation, can even cause hyperinflation. So what you have to watch out for is that change of behavior. That's what I look for in strategic intelligence.